I recently had the great pleasure of sitting down with Devin Ryan, Managing Director and Head of Financial Technology Research at Citizens JMP. In this conversation, we explored Devin's perspectives on SoFi Technologies, Robinhood, Coinbase, and other companies that are shaping the future of finance, many of which we share a deep mutual interest in. With over 20 years of experience on Wall Street, Devin brings not only thoughtful market analysis, but also unique insights into his direct conversations with company leadership and broader networks across the fintech space. A big thank you to Devin and his team for making this happen. But without further ado, please enjoy the conversation with Devin Ryan. Yeah, why don't we jump right into my favorite, because I'm a big SoFi bull, as you might know.
Sure.
And I read your full report. Although you downgraded them, it didn't seem like you had a single bad thing to say about them.
Yeah, so we launched formally on SoFi at the end of April, so only a couple months ago. But I've covered them really since they came public. We've known the management team prior to even being public, and then we followed it from the beginning. And I've always admired the business model. I think kind of a modern financial institution that really is going to be a one-stop shop. Like that's really been my thesis on the industry needs those types of players. And I wrote a report back in 2018 where I kind of outlined our vision for like where financial services are going. And a lot of firms have this vision, but it's very hard to execute on. I mean, banks 20 years ago were talking about being the supermarket, the one-stop shop to the end customer. And it's always been challenging because you have siloed business lines, and then you need a modern tech stack to be able to deliver that where the unit economics make sense. And so I think firms like SoFi, firms like Robinhood, and there's others as well, are kind of doing this in the modern era, and I think are doing it successfully. And what's exciting is that these firms have gotten to a level of scale where they can control their own destiny. So SoFi, as an example, they're profitable today and growing very rapidly, and so the flywheel is really accelerating. And so for going back to where I was starting, when we launched on them, the stock was at $12. And, at that time, we made the argument that the market really wasn't appreciating the growth story that we're talking about, the diversification, really that the firm has been, I think, executing on. And then some of these newer opportunities that are not really in the story yet. So the loan platform business is, I think going to be a game changer for them. It already is scaling pretty rapidly. And then, I think their opportunity to do more, in crypto, really scale up their brokerage offering, which I think they need to do really to be able to diversify away from lending. But very bullish on that. But at $12, we're making the case that by 2030, we thought the company could triple their revenues from about $3 trillion to $9 trillion, or $3 billion to $9 billion. And operating margins, as they become more mature, are going to scale from the mid-20s to the mid-30s. And based on that profile, we got to about $1.75 of EPS power by 2030. So if you take that price and you discount it back at a 13% discount rate, you get to a low to mid-$20 stock price. And so when we launched at $12 in April, we said, hey, fair value here is more than a double. Into the kind of the low to mid 20s. And in literally 2 months, the stock has kind of gotten into that zone. And so it's not a negative, nothing happened that was negative. It all was positive. A great first quarter earnings. I think second quarter earnings will be very good. And the momentum in the business is really strong. It's just a function of, the stock has worked. We think it probably consolidates here for a bit. I still think there's a ton of business momentum. So I could see the stock continuing to run, but I'm always, as an analyst, I'm trying to think about both the upside opportunity, but also what are the risks, what's the downside, what are the tail risks in the macro, where could we be wrong here? And so after you've had a 80% or so move, it's just now it's the time. Okay, let's reassess. And in order to take my price target materially higher into the call it upper 20s, which I would probably need to have to still justify the outperform at this moment. We'd have to have an even bigger view around where the company is going to be probably for the next few years. So it was simply that, kind of a victim of their own success, but not trying to make a negative call here, because I think we've had a differentiated view that there are aspects here that the street wasn't getting, and then also aspects I think that people are probably a little bit too harsh on them, around the lending part of their model, and I actually think some of those areas are going to get better as well. I mean, student lending we're very bullish on. This bill, Trump's big beautiful bill, is actually be pretty good for their student lending business, which is had some challenges, at least in volumes over the last few years with the moratorium. So long-winded answer, we're very bullish on the company's momentum, their ability to bring in new members and then diversify, kind of land and expand with their members. It's just a little bit of a function of how fast the stock moved relative to where our head was at back in April.
Sure. Yeah. And to anyone listening that might not know who Devin Ryan is, I mean, even the coverage back in April was phenomenal. I mean, from a bunch of the other analysts that were harping on about fair value accounting, you were saying that the company actually probably deserves a re-rating. And like you said, with the SoFi Invest platform that needs to improve, there was a part in your last article back in April that I thought was very important, where you said SoFi, each individual product has to stand on their own. Although the ecosystem is very strong, no one is necessarily coming for an ecosystem. They're coming for a specific product, and then they get sold through, right? So, yeah, I think you have a great way of looking at SoFi. I was just surprised, and I just don't know the industry very well. For, like you said, current fair value, if you're assuming $1.75 of GAAP EPS for 2030, it's maybe approaching $25 a share. And you increased your full year 2025 and 2026 EPS, I think just slightly, I think 50 cents to 52 cents, but kept the price relatively the same. Is that just because those are not large enough changes?
Well, we don't. So just to be clear, so we had a market outperform rating and a $17 price target on it when the stock was at $12. And that was based on a 15 times multiple on our 2026 EBITDA estimate. And that was at the time too, in April, FinTech was had been beat up a little bit through the tariff noise. And then, it's kind of recovered. Robinhood's had a huge move, and some of the other kind of what you call maybe pure names have had big moves. So the valuation construct of the entire industry has moved higher. So I would argue that SoFi deserves a higher multiple than even that 15 times that we had kind of initially had our $17 price target on. When I took the rating from a market outperform to a market perform, we know just the way our rating system works here, we no longer have a price target. So my point is, I was arguing at the time in April that fair value is in the 20s. It's not that we're at $12. Let's not get way ahead of ourselves, and we could have had a $25 price target in theory, but even getting to $17, the view was there's a great return here. And again, even at that time, there was also risks too, right? There's risks in the macro, there's uncertainties, and we're baking in both sides of that.
So you're not holding up a $12 or a $17 price target 12 months out.
No, we are not. We are not. The world has changed since April. So our view is that we are now, market perform isn't a negative call. It's, hey, this has been a great call. The stock is now in the low, kind of pushing into those low to mid 20s, which we argued was fair value today. Now, I'm going to continue to reassess this because we are looking at all the information that's continuing to come in. I think there's some really interesting aspects of their business model that are evolving. So the loan platform business, I think could be massive for them because as you think about what's going to drive value at SoFi, it's going to be continuing to evolve the business model towards, I think, less capital intensive activities, because investors are going to pay more for the ability to grow earnings without needing balance sheet to support that. And so, as a bank, as you grow loans, you need to hold capital against those loans. So as you get bigger and bigger, you need more and more capital, which means less capital to return to shareholders, to do M&A with. And so that's in the valuation construct. So as you can grow earnings with less capital intensive activities, that's valuation enhancing. So the loan platform business, which is still the third party, still in the very early days, I expect there's going to be more partnerships. So they announced partnerships with Fortress and Blue Owl, kind of two leaders in the alternative space. My suspicion is there's probably more appetite behind those partnerships. And so I would expect either those partners to put up more capital or them to bring in more partners and potentially even partners around other types of lending products. And so, I'm already thinking about that in my valuation view, but I think there's more opportunity to drive growth there. And then where I really want to see them succeeding more is on within financial services, doing more in the brokerage side. They really need to they've got great products. They've got a really good offering, getting more traction with customers. There's a lot of revenues that are out there in that addressable market, but I want to see them win more share there. And then the other huge leg that's just coming here is, what do they do in crypto? And our view, I've spent a lot of time in the digital asset space, and I cover Coinbase, but I spend time with all the private companies in the industry. And my view is that we're really at the starting line right now for digital assets. Up until today, it's been all about speculating and trading. We're transitioning into a world where it's all about the utility. Stablecoins are going to be a big deal, but stablecoins are really the tip of the spear to this bigger theme of tokenization. And then you start to talk about, how do you use tokenized products? How do you lend against them? SoFi is going to have their hand in, I think, a lot of those interesting new areas of the market that don't even really exist today. And so that's not really in my model, and that's probably incremental opportunity for them because they're really well suited to deliver products there.
Yeah, no, I completely agree. And I even though I'm very bullish on SoFi, I do think that they've sort of given up the market on active trader segments and stuff like this to players like Robinhood. But maybe that's a good transition. Let's talk really quickly about Robinhood, because you did actually put a price target on this company, $125 a share. If I could give you your flowers really quickly, back whenever this company was $7, $8 a share, you were pretty hard strong on the fact, I think you were $20 a share, 22, somewhere around there back then. I remember going back to old interviews where they said, how are you thinking that this company is going to triple from here? And now we're where we are today, over essentially 10x from the bottom. But where does this company go now? How has it evolved? How are you looking at it? And without giving it away too early, you did have quite an interesting long-term price target on this company, which I also thought was very interesting. But please, how are you looking at Robinhood?
Yeah, we can go there in a minute. But I think really from the beginning here too, my view has been that Robinhood is really well suited to be a leader in this kind of theme of being the one-stop shop relationship to customers. And so, we have covered Robinhood since their IPO. I've also known them since prior to being public. I've covered the brokerage space just by background. I've been an analyst for 20 years, and I've covered financial services for my entire career. Banks, investment banks, wealth managers, asset managers, retail brokers, and then I head up our FinTech research and digital assets research. And so I've kind of spanned a pretty broad spectrum, but I think that's helped me kind of in my view of like, where's the world going? How does technology integrate with traditional financial services? Where are products becoming more commoditized and there's room to deliver them in a new way or provide more value to customers? And so my view was that Robinhood, when they really formed the company in the 2015 is when they launched. And I remember sitting in meetings without giving away the names of firms that are competing in the space that were a little bit dismissive, like, oh, we've seen firms try to go with zero commissions before and it's never really succeeded, or we've seen something like this before. And what they didn't, I think, fully appreciate was a couple of things. One, Robinhood built a great product. So the product itself and the user experience, I think, is very intuitive. It's very easy, but they also met the customers where they are. So, at the time, a lot of the retail brokerage firms were really desktop-based models, and Robinhood said the world's going mobile. And so they went mobile first and built their platform off of that. And so great product, where customers are at zero commissions was a perfect package to scale. And they were also had the brand behind them that was kind of cool. And so they were scaling, and I think people became less dismissive. Not too long after, you saw all the other firms in the space go from, $9.99 to $4.99 to zero commissions. And so they really, I think, played a role in driving that. But the view is you've built this one product that's great. You've got the customer attention. Now you're profitable. Every incremental product you launch off of that, if you can do something similar and create a great experience and great value to the customer, is going to scale and create more earnings or more profitability to you. And so, they're kind of at this great point now where the company is so profitable. I mean, they're growing at rates, 100%. This year we think they'll grow by 25%, but they're operating at 50% almost, GAAP margins, which is like a mature company but with massive growth. And so 27 million customers, the next product they launch, there's very little acquisition cost. They acquire those customers for virtually nothing. And so then therefore they can deliver tons of value to that customer because they don't have to pay that high acquisition cost for that incremental product that they're launching. And so it's a really powerful flywheel if you can do it at scale. And that was the thesis from the beginning, that like this isn't just about trading. A lot of people thought they were just a meme trading offering. Our view was, no, they have the infrastructure and they understand how to deliver products and deliver value to customers that they love, that they can do this with a lot of other products. And I think that was our vision. And so, that was that view of like, this is going to be a much more valuable company. This is a generational type of company, a lot to execute on, a lot that could, in theory, go wrong, but you see that kind of mapping out. So to your question, the company generated $3 billion of revenues last year. And I see them getting involved in virtually all facets of financial services. And so what is the addressable market of that? It's something like $600 billion of revenue potential. So, Robinhood's talking about 10xing the size of their business over the next decade. And I absolutely think they can do that. So that would imply a $30 billion revenue type of company. And so, not put the cart before the horse here, but, the view is that, if they can do that, this is going to be a company that's worth probably $500. And, it's a question of how long that takes. They're saying 10 years. So I don't want to pay $500 for it today.
Crazy, yeah.
Is $100, $125? You're still getting a really big return if they can execute on that. And I think you just see what they're doing across, going after active traders, how they deliver their offerings they're so compelling, and now getting into, it's not just crypto. It's not about trading Dogecoin. It's about how do you tokenize all assets and what is the market opportunity of that? Again, it goes back to my earlier point. We're at the starting line of this, but they're going to play a big role in that. That's why they're buying these exchanges like, WonderFi. They're buying them to not trade, in our opinion, more meme coins, but to create the plumbing to be able to trade tokenized assets of all different types. And that's not just stocks, but that's potentially over time art and intellectual property rights and all kinds of other non-tangible things that are not tokenized today. So that's the big picture vision that we have, and we try to think like that for all of our companies. Where are they going? Not next quarter. We want to know what's happening next quarter, and that will influence the stock price. But where are they going in 3 years, 5 years, 10 years? And when Robinhood trades down to $35 in April because people are nervous about tariffs, that's when we get really excited because we say this is still a $500 stock that you're buying for $35, and that's how we try to frame it for our institutional clients as well.
It's been significant, or it's been very fun to watch Robinhood, especially from an M&A point of view, because like they purchase X1 and then you wonder what they're going to do with that, and then Bitstamp and WonderFi, and it all is coming together beautifully in such a Robinhood way. But at the time, there's so much speculation on if they're going to get it right every time. Even the credit cards now, people are wondering if that's going to be standalone profitable, if crypto or even to the like commission-free trading, is that going to be profitable? Their whole business seems to be going to such a point that no other competitor can price in that similar way, but yet they catch so much virality that they don't really have to spend on sales and marketing. It's like such a genius plan.
Yeah.
But you've been on top of it since the beginning. I'm curious what sort of weight you put into international expansion. You brought up WonderFi. I'm actually from Canada. I'm in Toronto right now. Every time I see Vlad, I always say, like, when are you coming to Canada, right? And he brushed me off. But then whenever they acquired WonderFi, it seems very real. Now, a question that I want to bring up as well while you get into international expansion, do you think that we're going to see expansion like what they did with the UK ever again? Or are they going to expand to brokerage through tokenization going forward, and they won't even essentially need to go the route of really setting up true brokerage services and just instead do everything on chain? Like, how does that work?
Yeah. So there's a lot obviously in there. I mean, I think the move to kind of tokenizing everything, this is a multi-year, and in some cases could be, decade kind of theme. That my view is that virtually all assets will get tokenized over time.
Sure.
And that doesn't mean every dollar of every asset, but when you move from a world that's T+2 or T plus longer than that to T literally zero, it just changes the whole dynamic. So when Robinhood got a lot of flack for taking the buy button away, they didn't take the buy button away. In reality, what happened is they got a call saying, hey, from the clearinghouse saying, hey, you owe us a couple $2 billion because some calculation occurred kind of at the clearinghouse that they had no idea about, because there's no transparency around it. And Robinhood didn't have billions of dollars to do that.
Yeah.
So they had to essentially shift the ability to allow people to trade in certain stocks for a short period of time. That's because there's a T+2 settlement and the money has to settle, the trade has to settle. And when you go to tokenization, there's no settlement time, there's no lag, there's no latency, there's no trapped capital. So the velocity of money accelerates, which is a whole nother conversation around, I think very bullish, for the economy. It's bullish for money movement. But it just allows assets to interact in ways that historically they haven't been able to, when you have to settle a trade and then wait a couple of days and then that money can get moved out to another account. So that's all going to take, this is my view of where the world is going. That's going to take years to probably reach some level of maturity. So in the meantime, I do think they're going to continue to scale up their kind of traditional international, brokerage offerings. And remember, they still have, market structure is going to evolve around crypto and digital assets, but you still have market structure around the stock market, investor protections. Well, so you can't just, a lot of the time delay is making sure that you have the right market structure for digital assets that are, in a lot of cases, mirroring the protections that exist in the traditional asset market. So, I do think that they're going to build out kind of an international platform, across both the geographies are in today, but I expect, you'll see more probably in Asia and Latin America. Just follow the pools of activity where there's interest in trading, they will be there. But then the other thing that people underestimate is they go do their assessment on what is a revenue opportunity. And Robinhood, like in the US, how many new investors did they bring into investing? They brought in tens of millions of first-time investors. So they kind of, when they land in these markets, they play a role in kind of bringing that product, democratizing access to that product. And I think people don't always think that way. They're just thinking about what's the pool of opportunity today. Whereas I think Robinhood oftentimes is breaking glass and creating new revenue streams that didn't even exist for others in those markets.
I think if you were to look back at the total option size in retail trading before and after Robinhood, the percentage of retail traders would have changed dramatically. Or Nubank for credit cards, if you were to say how big would the market have been for them in credit cards, it'd be a heck of a lot different before or after Nubank. I mean, they're market changing. So that's a very interesting point. I like that a lot. You can't just look at the existing markets. They're going to change it. Is there any other things that I think that retail investors or maybe just investors in general are overlooking in the Robinhood case, and that might potentially make it a little bit more compelling for investors, and why you guys are sort of leading the charge on price targets for this company going forward?
Yeah, I think as an analyst, and again, every analyst has different ways that they operate and kind of what they're focused on. And, the market just overall, and there's a very short-term dynamic to investing today. It's very hard for institutional investors to, even if they want to own stocks for 3 to 5 years, you can't just buy it and then forget about it and wake up in 3 years. So there's a lot of shorter term trading that happens around longer term views. And, you have to understand, is this going to be a good quarter or a bad quarter? And there might be trading that you have to do around that to manage that position sizing going into a quarter that you might not think is going to be as good. And so that's part of the, being an analyst, I think being good at the job, understanding the near-term results, but then also being in the flow of like, what do investors care about? Because if I have a differentiated view on what people care about, company may miss earnings, but people thought they were going to miss by a ton. So if they just barely missed, that could actually be good news and the stock could go up. So you kind of have to be in the flow of information to understand what is driving a stock over a short period of time. That's short term. Longer term, as an analyst, what I try to do, and I think we've done a pretty good job of over my career, is kind of having a view of where the puck is going and taking a stand on that. And that's kind of this point on Robinhood. Like, we've had a bigger picture vision of kind of this interconnectedness of financial services and the convergence of companies that started as lenders getting into brokerage and asset management, and companies that started as brokers getting into lending and banking. And Robinhood's now, I'd say they're neobank, right? And they're launching a lot of banking products themselves. And so that's been a big part of my vision. Tokenization, I think we've been ahead of the curve. I've been talking about this for 5 years. This is not, blockchain and crypto is not just about speculation. There's actual real use cases that I think are going to be a big deal. And then the innovation that's going to come on the back of that is going to be huge. And that's very hard for us to even talk about, because we don't know exactly what that innovation is going to look like, but we know it's going to be there. And so, to your question, for investors, I think it's trying to think about, where the world is going, what are the big themes, and then, for example, how could Robinhood play a role in those themes? So, give you one example, artificial intelligence. They're going to be a massive participant in the theme of artificial intelligence within financial services. They haven't launched a ton of products. They have Cortex, but there's not a ton in the firm today that's tied to this theme of artificial intelligence. But that artificial intelligence is going to be a massive, just secular trend across all industries. And so, as you think about that, well, where are areas where it could affect them? Well, I think there's a lot of things that they will, and they'll be a leader in this, by the way, because they're a tech-forward company, and they're thinking about this. It'll be integrated into how they market to customers, how they recommend products to customers. But I think where we're going is to a world where it gets integrated into essentially a digital advice. So robo offerings 7-8 years ago, I think were interesting products, but they weren't really dynamic or customized. And I think that artificial intelligence, if you think about taking a really slick user interface and having a chat GPT underneath that, where it's optimizing to you, to Tanner's personal, it's your personal liaison. Hey, you're spending a little bit more this month. Is everything okay? Maybe you need to I reposition these investments because they've done well, and you're kind of getting real time optimized advice. Or, hey, you have 2 credit cards outstanding, and if you could save $100 a month by consolidating your debt into these other products. And so, it's really, financial advisors, I'm still bullish on, because I think financial advisors are non-commoditized relationships, the personal concierge. I think that they will have to do more and more with technology over time. But I think about it as everybody's going to have access to kind of like almost perfect information, where if I'm just starting a family, I can ask the AI, in 5 years, am I going to have enough money to buy a house, or am I saving enough for my child's college fund to go take this trip? And you're getting real information optimized to you. And I think AI is going to play a role in kind of delivering that. So I think that Robinhood is going to be involved in all of this. And I think that they're going to do a lot more with that technology, just like you're starting to see some of the things that they're looking to do with blockchain and tokenization.
Well, yeah, that leads us pretty well into the next sort of topic. I want to talk about Coinbase, but maybe with your knowledge of Coinbase, help me fill in some gaps with Robinhood really quick to wrap up the Robinhood conversation, which would be sort of, what are they going to do with stablecoins? Obviously, people understand faster, easier fractionalized, international remittances, cheaper, faster, everything like this. But what are some use cases that they can integrate there? Because I think they're going to be huge in that area. USDG with what their partnership there. And is there any learnings that we could learn from Coinbase on how they might do that? Or Tell me some of your thoughts from the firm there.
Yeah. So just taking a step back, I mean, stable coins are just the kind of the first tokenization product at scale. So like it's part of a much bigger theme is kind of the first point. But in terms of like where they can use stablecoins are just for everyone listening, it's just a digital representation of a stable currency, a US dollar or a euro pegged 1-to-1. And the way it works is you give me, or I give you $1, you give me back $1 of stablecoin. And if I'm the issuer, like Circle, I go out and I buy $1 of US Treasuries and I clip, 4% spread on that. And so there's revenue in that spread. And so Robinhood, and I don't know all the nuance of the arrangement, but there should be revenues that they share in from in the partnership structure of the amount of float of stablecoins that are used on the platform. They'll generate revenues in partnership for having those stablecoins in their wallet. So that's the first point, that there's revenues. The more stablecoins that are on the platform, the more revenues there are in partnership. But I don't know all those economics. In terms of where they can use them, I think the initial use cases are peer-to-peer money movement. So integrating it into essentially a Venmo-like kind of relationship where you're moving money to friends internationally or even in the U.S. and you may have some of that money continue to be parked in stablecoin. You can have stablecoin in the brokerage account in the digital wallet. So if right now you're not allowed to pass along the interest on the stablecoin to the end customer, so that maybe it would be less exciting to the end customer to have $1 of a stablecoin in their brokerage account relative to call it a money market or some other cash-like instrument. But in theory, some portion of the brokerage account could have a stablecoin, sitting there for a period of time as dry powder before they want to go reinvest it back into a stock or some other asset. And so there's opportunity there. But then
really quick,
term,
how is Coinbase able to offer a rate, but Robinhood isn't? I'm not close enough in the space.
Yeah, so it's a great question, and that probably leads us into the Coinbase conversation. But Coinbase founded or co-founded USDC, which is Circle's stablecoin. It's the second, besides Tether, it's the second largest stablecoin in circulation. Roughly $60 billion of assets within USDC. Stablecoin entire market cap of the entire industry is like $250 billion. But back in 2018, Coinbase co-founded USDC. They're not the issuer themselves, and so they have an economic arrangement with Circle where every $1 of USDC that sits on a Coinbase wallet or Coinbase adjacent wallet, that 100% of the reserve income that's from the treasuries gets passed through to Coinbase, and then Coinbase then passes that back through to their customers as a quote unquote reward, that is essentially 4% or a little bit above 4% to incentivize adoption. So Coinbase is very smart. They're saying, hey, how do we get people to use stablecoins? Well, we give them a competitive reward on it that they're going to want to have money in a stablecoin relative to some other alternative. And so they have this special relationship with Circle where they're capturing such a massive amount of economics that they have the money then to pass through. Now, not to go kind of too deep in the weeds here, but this Genius Act, which is the legislation that passed the Senate and now it's sitting in the House for reconciliation and probably passes soon here. I think they're right now, the way it looks is that Coinbase will be able to continue to pass through these rewards, but in the spirit of what the Genius Act says, other issuers are technically not allowed to pass through the interest to customers because Coinbase isn't an issuer themselves, and because it's not technically interest, they are kind of able to continue to do this. But we'll see. Our view is that they're probably still doing things the right way in the construct that they have. But I think that's a question. And so in theory, could Robinhood do something similar? Possibly, but Coinbase has such a special economic relationship
Right.
with Circle, which I just described, which gives them the capability to pass through such a high reward back to customers.
And like whenever that law recently got put up, or the Genius Act got put up, Circle went on an unbelievable run. I mean, absolutely incredible. I think they IPO'd at like $31 a share now. I don't know where they're sitting at right now, but at the high point, I think it almost just breached $300 per share. Coinbase, I mean, they did absolutely have a phenomenal run, but they probably should have had a little bit better of a run than what actually happened, because I believe that they're the true winner here. And you've been on this name for an extremely long period of time.
Yep.
Coinbase, you describe as a generational company. Explain to me where Brian Armstrong can lead this company at, like, where are they headed?
Yeah. So similar to Robinhood, it's obviously it's a different story. There's some convergence even happening with these models, right? But from the first day that we've covered Coinbase, our argument has been trading 10 years ago, just getting access to cryptocurrencies, primarily Bitcoin, but Ethereum and others. That was not a commodity. I mean, it was a complicated space. You got to make sure you trusted, where your money was and how it's being custodied. And so Coinbase added a lot of value into the ecosystem by being a trusted, regulated, at least in the realm of how they're regulated, entity to interact with, to get access to buying and selling digital assets. And so that was their first kind of foray into the market. But over time, trading becomes more commoditized, just like equity trading has become more commoditized. But what happens is markets become commoditized, the fees compress, but the market sizes expand. So, Schwab 40 years ago charged over $100 to trade a stock. Today it's zero. Schwab's revenues have grown by many, many, tens of multiples, and their operating margins are much higher today than they were 40 years ago. But it's because the market size has expanded dramatically. So with Coinbase, I think a lot of the negativity has been, hey, they're an exchange and their rates are higher than some other firms. And I've said in the beginning, people are missing the big picture here. The providing access to buy and sell was not a commodity a decade ago. As it's become increasingly commoditized, their spreads are going to come down. But the Coinbase story is really that they are just an on-ramp into all things blockchain. So trading was the first foray, but Coinbase is building the Amazon AWS of crypto. So what I mean by that is they are going to be the firm that everybody has to look to, and it's not everybody, but if you're a big company and you say, we need to figure out what our tokenization strategy is, or we need to provide access to crypto wallets, Coinbase will be in the conversation to provide access to that, be a service provider, be a custodian of the assets, because they're building all the picks and shovels to bring people into the ecosystem. And so, stablecoins is just a great, it's becoming more obvious, I think, to people that, they're going to be involved in stablecoins in a massive way. They're going to be involved in tokenization in a massive way. They're going to be involved in the evolution of Web3 in a massive way. And so the argument from the beginning, to go back to the beginning here, is that Coinbase drove the majority of their revenues 5 years ago, actually all of them, from essentially exchange functionality. Today, roughly a third of revenues come from what's called subscription and services. So that's stable coins and interest and staking and other kind of non-crypto exchange related functionality. And that piece is going to grow, in our opinion, much faster than the exchange piece. And that's the valuable, not to say the exchange piece is valuable, and that I think can still double or more by 2030. But the services and being the on-ramp into Web3 and into tokenization and trading all these other types of assets and being a custodian of choice and a trusted party, they're going to continue to be a leader there. And the revenue opportunity there is going to explode here as we get legislative clarity, both on stable coins, but market structure probably later this year. So that's kind of the pitch I've made for years when everyone's focused on trading volumes and take rates and stuff that's kind of like, that's the very near term, like you're not getting it story, whereas like the bigger picture is this is going to be really a play on all things blockchain integration into the economy, which I think can 10x over the next probably next decade.
I'm a big believer of that. To be honest, you kind of called me out a little bit. I have been a big showing off their high take rate versus Robinhood's, sort of, bringing down retail take rate a little bit. Robinhood's is kind of 5x'd since they've been public and on their crypto take rate. So I've definitely been on that train, but I do agree that Coinbase, like if they do start getting into stock trading and everything, it almost seems like the market is heading to where they are perfectly placed, right? Where they are best. But it is interesting. I mean, from an institutional side, being the AWS, how large is that market if they're taking 1/100th of what they would do if people were natively on Coinbase's app themselves? Like SoFi's Galileo versus being a SoFi customer. It is not as favorable.
Yeah. Well, I think it's a huge market, because I think that talk about these like big themes. You go back over the last 20 years, like mobile. What's your mobile strategy? It wasn't like the mobile company. It's just every company, mobile just gets integrated into the business models. AI, of course, you want to go look at the AI-centric companies, but AI just gets integrated in the business models, and it's just the way you operate. Blockchain, it's not supposed to be this technology that's this crazy technology that this is scary thing or sexy thing. It's a technology that's just integrated into the model in different ways, and helps with smart contracts, how value is dispersed. It creates new ways to maybe monetize your value as an artist, or you pick all the various interesting use cases, or follow a drug through production. I mean, there's just in the healthcare system, there's so many kind of almost boring use cases, but you could say are kind of the really the bread and butter of what blockchain can do over the long term. And I think firms are not native crypto companies, and they're going to need, if we want to integrate, we see the technology potential, we want to integrate it into our business model, you need a service provider that are experts in that. And that's what Coinbase has. They have experts that have made mistakes, that have learned a lot, that have launched products that can integrate businesses and merchants and people into using the blockchain technology in many different ways that companies aren't going to have that inherent expertise to do it themselves. And so that's where I think that's the big, how big can it be? It's just starting, but it could be, I think the addressable market for all of blockchain-based activity could be $500 billion plus over the next 5-6 years. And so what piece of that does Coinbase get? I think they could get a healthy piece. There's a lot of other great, by the way, there's great other companies or private companies that are coming public. They're going to have capital behind them. So this isn't without competition. And there's a ton to execute on, just like for all these companies. When you have a big vision, there's a lot to execute on. There's macro risks. You get into, if crypto prices tank, that could slow adoption. There's a whole bunch of things that we think about of what could go wrong here. But I think that when you zoom out and you think about why companies have a right to win and what their moats are, I think that Coinbase is really well positioned. And I also like it when I find stories where I feel like people are looking in the wrong direction, or I've covered brokerages for 20 years. So I've seen Schwab is a great example of, like, they started with trading, but then they added all these other products onto the platform so that they're connecting with customers in so many different ways. And so it's not just about the price. Some customers, the take rate matters. And for those customers, they got to get a better pricing deal than other customers. Other customers value the trust, or they value the ability to transact in assets that they can't get elsewhere, or they value how the wallet interacts with some other technology. So price matters, but it matters differently for different people. So you have to kind of understand the full ecosystem to, in my opinion, to understand where price falls in that conversation. But I'm not saying we're not concerned about it, but I think take rates will absolutely compress. Well, they'll compress over time as volumes grow, and at the same time, all these other revenue streams are kind of popping up that no one even thought about 2 or 3 years ago, and we're trying to get people's attention to.
Yeah. I get pretty excited just talking about crypto in general. I mean, I am bullish, but in terms of the comments that you made earlier about what stable coins or artificial intelligence does, or even bringing on international customers to now buy more American companies, do you think about that as a multiplier, or like to bring up multiples on earnings for American companies if there's simply more money to buy a select few names still? I mean,
absolutely. I mean, that's the other thing about this is being an analyst. It's like you're looking at the fundamentals of the company, but then you're also thinking about just the barriers to ownership. So when companies, Coinbase just got into the S&P, right? So what happened? The stock went up a lot. Well, the fundamentals stayed the same that day. The stock went up a lot because you've essentially removed a barrier to ownership, or you've essentially opened the funnel for brand new investors that now kind of have to pay attention and have to buy it. And so when you bring in more capital into ecosystems, price goes up. And we've been very bullish on Bitcoin as well, because the ETFs, we made an argument back in early 2020, last year, that you're going to see probably $250 billion of inflows into these Bitcoin ETFs over the next 3 years. And people said, well, that's a crazy number. How did you get there? Well, there's $30 trillion of assets that are managed by financial advisors, which really can't put their customers into and put them into spot Bitcoin or spot Ethereum, because they'd have to move those assets off the platform to a outside custodian, which advisors just are not going to do. So therefore, you're essentially removing $30 trillion of buying demand from the pool of assets that can buy crypto. When you put it in an ETF wrapper, now you're in the game. Now, that doesn't mean on day one, $30 trillion comes in, but now you're in the game to at least start to have that conversation of, is it appropriate for customers to own a portion? And so you do some math around that, and you can get to hundreds of billions of dollars pretty quickly with even very small percentages of portfolios. There's a lot of institutional investors are the same thing, and I think that's what some of these treasury companies like Strategy and on Ethereum, there's a company SBET that is doing the same thing, the consensus team. And so really interesting where you've essentially created these new vehicles to provide access in different parts of the capital structure to the asset class that maybe their mandate wouldn't allow them to just go buy the spot version of it, but they want to have some exposure to either the asset itself or the characteristics of those assets, like the volatility, and they can hedge out other portions of it. So it's just a fascinating moment where you're removing all these barriers to ownership and you're creating catalysts for demand as well. There's so many catalysts for crypto beyond just the ETFs, where we see just it's a kind of a groundswell building that we still think is gaining a lot of momentum. So I think you need to be careful about which assets, because there's tens of thousands of blockchains, and our view from the beginning is this can't just be about speculation. It has to be about which blockchains actually have a use case, which ones are building network effects on top of them because people want to use those blockchains, and then what are the tokenomics, what are the economics of the actual tokens, and supply demand dynamics, and that's going to drive value. But I still think that there's a lot of capital coming into your point into that ecosystem. There's capital coming into FinTech overall, because people want to see these companies that are now profitable, I think, that are establishing themselves and executing.
Yeah.
And so it's becoming, I wouldn't say more obvious, but it's just becoming de-risked from an investment perspective for large institutions to come in and allocate capital to what we think have been really good companies, but now I think they're more proven. And again, that flywheel is kind of accelerating.
Two quick questions. It'll be a little lightning round here. One, you talked about Coinbase as a sort of the AWS for crypto on-chain. Robinhood just recently spoke about potentially their first back-end product, the Robinhood chain. What were your initial thoughts about that?
Yeah, so I think it makes a lot of sense to, you don't necessarily own the blockchain, but you have your own trusted blockchain that you're driving transactions through. Coinbase has Base, and they're scaling that up. But yeah, for Robinhood, it was
I think,
interesting
by the
to
way,
hear
Base
that.
has a big product announcement or something tomorrow.
Yeah, I don't.
Yeah,
Yeah, I'm not sure what that is, but I think you're gonna see more of this, right? These layer two blockchains that essentially become the transaction layer to aggregate transactions and then settle them on Ethereum, as an example, where if you just went directly to Ethereum, it's going to be more expensive, and so if you have a really high value transaction, maybe you want to go directly to Ethereum, or really high security transaction, use Bitcoin. But if you're buying a cup of coffee, it's probably better to batch that with a lot of other cups of coffee for a very low price point and then settle that. And same thing with your Robinhood chain. A lot of transactions get batched together and then they settle on the blockchain together, where it's more economic to do it in a batch rather than individually.
sure, sure. Another question which has just escaped me. Maybe I will. Oh, sorry. Yes, I remember. Robinhood. How are you thinking about its opportunity based on what you know about Coinbase and everything for stable coins, for Robinhood Gold versus Coinbase One, stablecoin staking, these sort of things as they expand more into crypto? Is that a multiplier for their crypto earnings there?
It's absolute multiplier. I mean, that's where you talk about Robinhood going from a $3 billion revenue company to a $30 billion plus revenue company. Yeah, you need these streams that were kind of, as I envision out and map this out, like that's part of the view that crypto, I think, could be 10x the size of it. I mean, like that's going to weigh more than 10x. If you think about what businesses will 10x by 2035, if you will, crypto is going to far more than 10x, if you will. I mean, the tokenization, what's exciting is like Robinhood trades stocks right now. They're going to be a platform. If you want to trade real estate, you want to trade IP rights, you want to trade your airline miles, you want to trade, it's going to be a liquidity hub to be able to transact in all these different assets that tokenization will allow. Stable coins will be one of the assets that interact with these other assets. Stable coins can be their own asset where you're moving a US dollar to somebody in another country, or to a friend across the street, but it can be an asset in its own right. But I think that the bigger theme of tokenization is going to be a huge deal. And then Robinhood, they're obviously very forward leaning. How do they, and they're a brand and a great marketing machine, like how do they interact with consumer facing brands, and do they do more with payments over time? Absolutely. Like this is where you start to go down that path of like, they're not there yet, but I think there's a lot of really interesting, if you just kind of sit back and think outside the box, and the type of technology that they have, the way they've been able to build products, I think they can get involved, especially as there's this convergence, right? If you're in all these silos and they don't interact with each other, it's really hard. When you break down those silos, either because you have a modern integrated tech stack, or because now we're moving to a world that's tokenization and all assets get tokenized T+0 and they all interact together, that's where you can get really excited. I think Robinhood is one of the best positioned to interact with that, because one, they've got a lot of customers. They understand where the technology is going. But I also think that they are, over time, we didn't talk about this, but like they will be with institutions over the next couple of years. I think the crypto is one foray, right, where they're going to be obviously interacting with both retail, with Bitstamp, retail and institutional customers. They acquired a company, Trade PMR, which is a financial advisor custodian platform. So your Robinhood is known right now for retail customers. They have 27 million. They're going to have a lot more types of customers as well over the next handful of years. And I think crypto is a foray into that realm for them. They'll find some other areas to intersect there. I mean, on the trading, active traders is one area where you kind of go upstream, and then you start to provide more prime brokerage like activity. Some of the large investment banks, I'm not saying they're necessarily going there immediately, but there's just a lot more that you can think about in financial services where, the technology is really transferable, and because of the way they've built this platform, it's really scalable.
It's funny. I almost forgot about Trade PMR. They've done so many recent acquisitions and expand their market. You almost forget about all the different moves that they've made. Last thing to say is that, through your successes of covering fintech names recently, Coinbase, SoFi, Robinhood, the list goes on and on and on. Dave, right? eToro was on the top ideas going forward. Tell me about, this is a name I know not too much about at all. So tell me about sort of what you're thinking about as next big picks from JMP.
Yeah, so I would say eToro, we highlighted, they just came public. A lot of connectivity with firms like Robinhood. They're more international based, so they're primarily outside the US. They're, I think, going to make a bigger push in the US, so that's actually an opportunity for them. But the call there is you've had these stocks have massive moves. Robinhood, is, as you know how well it's done, and others. eToro is still trading at, I think, a very reasonable valuation. It's 13 times our 2026 EBITDA estimate. Robinhood's well over 2x that. Now, I think Robinhood's a more mature company with some additional legs of their stool, but eToro is a very technology-forward company, and I think has some really interesting products. So their social kind of trading operation is, I think, differentiated. They have something called Copy Trader, which it's a fascinating product because essentially the first-time investors that use Copy Trader can get access to the exact same trades that the most experienced traders on the platform can. And so on one hand, that's a great outcome for those investors, but also for eToro, as you think about, there's something in the brokerage industry called the 80-20 rule. 20% of your customers drive 80% of your revenues. 20% are the most active. Well, if you take your 80% tail, which is really kind of those less experienced customers, and they're now copying somebody that's in that 20%, because by definition, somebody that's getting copied is going to be somebody that's deep in the weeds on the market and is probably trading their portfolio very actively. Now you're taking that person that's on their own, wouldn't trade much. Now they're trading many multiples. So therefore, the transaction per customer goes up. And so if you look at eToro's transaction per customer, it's much higher than Robinhood. Now, the copy trader also creates a very strong stickiness of the customer relationship, because if you're copying somebody on eToro's platform and they're established there, and you're having a great experience, then you're less apt to go try a different platform on your own. So I think it's built a really powerful ecosystem for them that they can continue to scale. And I think they're going to be a leader in this theme of integrating artificial intelligence and blockchain, and then also democratizing markets for people, particularly outside the US, where stock ownership is a fraction of where it is in the US. And so I still think there's just a lot of secular growth there, which is great for Robinhood as well, as they are going to push the envelope. But I think there's a lot of room for eToro, which has been taking market share, to continue to do that. And you're buying the stock that I think can grow, probably over the next handful of years. Not going to be on a straight line, but probably 20% plus top line. And you're buying it at 13 times our 2026 EBITDA. Like, to me, that's an opportunity against a market backdrop where a lot of these stocks have moved.
I think that's amazing. It's definitely a name that I need to explore. But Devin Ryan, those are all the questions I have. Thank you so much for your time. I really do appreciate it.
Yeah, Tanner, was a lot of fun. Love to do this again sometime soon, and maybe reconnect as we get through earnings season here coming up over the next couple of weeks.
Perfect. Yeah, we've got a busy season coming up. So thank you so much.